So I want to discuss relationship banking with y'all in this particular video because relationship banking has evolved over the decades and over the years into a major underwriting factor now in today's market when it comes to consumer and business credit. Relationship banking is becoming one of the top underwriting reasons you're getting approved or denied for funding. So we need to start actually diving deep on what relationship banking is, its roots, what it is today, and how it's evolved into the major credit decision that it has become in recent years. So if I'm going to paraphrase it, relationship banking is going to basically be banks' evolution in offering a plethora of personal and small business financial solutions that is like a one-stop shop suite or ecosystem. More and more financial institutions are covering a broader range of financial products in their ecosystem for their clientele. You know, the roots of banks over time used to be just somewhere to put your money and somewhere to get access to that money when it's time to deploy it. Over the years and the decades of technology has evolved and the economy has evolved and the needs of us as consumers and as small business people have changed. Banks have found it to be more profitable to offer a solution, a suite of products. They found it more sensible, profitable, and it just kind of like strengthens their business model when they're offering more products that complement each other under one roof. And we're in the information age, we're in the technological age. Data, the new gold, or as one companies and financial institutions like Chase Bank and other institutions know about us, they can tighten up their business model on profitability and minimize their losses. As I always teach on this channel, the two major things that any major company and institution is going to want to do in a capitalistic society. So relationship banking has given insight on us as consumers and as small business clients on our behaviors and our psychologies. And now banks have caught on that this information has become really good resource to determine whether or not we're going to be quality borrowers, especially if we start to build out those relationships in advance of applying for credit. So now relationship banking in today's world, when you think about Chase Bank, Bank of America, some of these larger institutions has graduated into a major underwriting pillar. I'm seeing data points and hearing from some of my colleagues in the space how, and I'm seeing firsthand as well, how small businesses and consumers are getting approved and declined based on their banking relationships. A good example that is a little bit more front-facing that you might be able to relate to and can easily look up is Chase Bank's Freedom Rise credit card, for instance. That credit card is for people completely brand new to credit altogether. And the predicating factor on whether or not you can get approved for that card is going to be if you have a banking relationship with them. If you have a checking account or a savings account with Chase Bank and have a certain balance relationship, it literally can make the difference of getting approved or denied, regardless if you have a credit profile or not. There's even more and more talks of credit scores being leaned on less by banks when making their financial decisions. They're using more and more in-house underwriting than just leaning so heavily on FICO scores to approve or deny their clientele and their applicants. So when you dive deeper into relationship banking, now the question becomes, well, how do you effectively use relationship banking? What does it look like by institution? And that's a great question. Relationship banking is going to vary indeed by institution. So what that basically means is how relationship banking looks with Navy Federal, for instance, is going to look different than it does for Chase Bank than it will look for American Express. Why is that? Because they offer different products and services. Their relationship banking portfolio, the suite of solutions they're going to offer for consumers and small businesses is going to vary. When you're doing relationship banking, you have to pick between a checking account and a savings account. Which of the two is going to qualify you the most for higher approval odds, higher limits, etc.? Which one is going to demonstrate to a bank your financial behavior the most and allow them to feel more comfortable to qualify you for more funding? Believe it or not, the checking account is going to be the prime indicator for relationship banking. You can see it with banks as you start to do your research on them, what they incentivize you to use the most. When you join a financial institution and you join them via savings account or you join them some other product other than a checking account, you will notice in a short window of time, they're going to start to try to entice you to open up a checking account. Now, when you open a checking account with a financial institution and maybe you don't open a savings account, you will notice they're not going to push you as hard to open a savings account unless there's indications that you have higher balances and they want those deposits. Again, referring back to the Chase Freedom Rise, it's the same thing. With the Chase Freedom Rise, up until recently, the first year of its inception, they were leaning strictly on the checking account to get approved for that Chase Freedom Rise. You had to have a checking account with a deposit of $250 or more at the time of the application. Just in recent weeks have they changed it, where it's now a checking and savings collective balance that you can have. You can have a savings account now and still qualify for the Freedom freedom rise. Checking accounts are going to be the basis at which you're allowed to spend and deposit free enough for them to be able to monitor how you actually function when it comes to your financial behavior. And that makes a huge difference with relationship banking, with underwriting, and getting higher approvals and getting guaranteed approvals. Your savings account with a bank is a good indicator of prudence, responsibility, and it can show that you have excess cash that you're sitting on. It is a good metric. It is very relevant. But if you have the opportunity, if you have the choice, and you're looking for the best results, the best ROI, a checking account is going to absolutely get you better results with a financial institution because you have enough flexibility in a checking account. Checking account, you can spend a variety of ways. You can transfer, you can borrow, you can do it at an unlimited capacity versus savings accounts that are usually restricted to a handful of transactions a month. So checking accounts are going to be the premier relationship banking tool that you can leverage to increase your approval odds because it gives banks the opportunity to do similar research or data analysis on you that they would pull in your credit report. But you got to remember, credit reports are past indicators. It's only as good as the previous 30 days or the previous X amount of years up to the last 30 days or so. Your banking account tells them live and active how you're doing and how you're functioning. And this is a much better gauge of your financial behavior and your psychology. Gives them a much better point of comfort than your savings account ever can. So I wanted to put context on this for you because trust me when I tell you, you have to start today's evolution in the banking system. If you're looking to strengthen your personal finances, get access to capital on the consumer or business side, etc., you are going to have to keep up with this ever-changing landscape of underwriting and how banks are gauging you because I'm telling you right now, they're shutting down banking relationships, they're denying applications, especially in the economy that we're in right now with so much uncertainty. You have to understand the way they're looking at you so you can control the picture and control the narrative. I want you to comment down below and let me know how you've experienced relationship banking, if you've even noticed the difference with going in and establishing a relationship before applying for credit, or if you noticed a difference once you started a banking relationship after applying for credit. Let me know down and keep the conversation going and what your experience has been. To all my pioneers, welcome back. To my new viewers, welcome in. I want you to keep supporting the channel so this channel can keep supporting you. I want each of you to stay focused, stay in motion. I'll see y'all soon.